The market was red 4 days in a row. Bitcoin hit 60,000. We managed to squeeze out high percentage returns in call options as well as put options. This episode is not about flexing results. It's all about how to think when the market's red. Welcome back to Finesse Fridays. This is where I'll break down the structure, our mindset, and the execution behind our swing trades for the week. 4 days this week, the markets were solid red. Bitcoin, in particular, dropped to 60,000. Imagine the headlines sending traders into a frenzy, most panicking. However, red markets reveal those traders with the process versus traders who only know how to trade when the market is green, as in only when the market is going up. This week alone showed that. When the market is red, most traders either do one of these three things. One, they panic sell. Two, they freeze and do nothing. Three, they revenge trade to make it back. None of those three things are actual strategies. Red markets don't require more emotion, it requires structure. This is what I want all of you traders that are watching this right now to think clearly about. Red markets are not broken markets. They are transitional markets. And transitions create opportunity if you're prepared. We didn't wake up surprised to weakness. We were prepared to execute based off of the analysis of the chart and understanding of entry price as well as risk management. Let's right now dive into the trades for this week. Visual chart of one of the broader market indices, which is the NASDAQ QQQ. So you can see how the start of the week, what that looked like. And then I'm going to take you into the watch list of the three stocks in particular that were fresh, new, in which we capitalize off of. I'm talking about 300, 400% return plus on each individual stock pick based off of either the call options or the put options. I'll get into Apple. It was a fresh stock pick from Friday afternoon. PG, that was sent off on the email. It was a brand new stock pick for the week. We also got into another one, but it didn't hit target yet. We are still up on that. I'll discuss it when it hits target. And then MU, our bonus trade, shorting it, meaning making money when the price fell. I will discuss our Apple trade. Apple was the complete opposite setup, the complete opposite visual view of how it looked on Friday. Friday, I dropped in our Discord community in regards to the powerful formation of Friday's candle. A great entry point. I wanted to make sure that I dropped it in enough time where anyone could grab option contracts, calls in particular, to take advantage of what was to come. Looking at this chart, I'm going to give you an insight of exactly what did I see for Apple to be a great mover into this week. The first thing was this powerful candle that occurred on Friday. You'll notice that earnings is here, and last week I spoke about not taking that 50-50 chance of buying a stock in hopes that they beat earnings. There's no need to gamble. You want to gamble, go to the casino, okay? So we don't gamble here. All of our trades are based off of high probability setups. I am not going to take the trade unless I understand that I have a 90% chance that this is going to play out in my direction, in my favor. And you're probably trying to think about 90%, Latoya, really? Yes, because I have the data. I know the outcome of when I see particular setups, what is going to happen. What I cannot measure for is how fast the move is going to occur. For Apple to make this type of push for this week alone, can I have foreseen it? Not necessarily, but what I foreseen was that it was going to push and give us some great profits. It could have been 50%, 100%, 200% return. However, this week outcome was a massive 400% return on the calls. So exactly what did I see? My entry was all based off of Friday's candle. I wanted to make sure that it was entered inside of our community within the profit room so members can also benefit from this trade setup. Once I post a chart, all of our students that took the program, they instantly know, what am I looking at? What am I seeing? They've been through the materials many times. They've been through the mentorship, so they understood the picture. First and foremost, let's get our trend line. If I connect my trend line just like this, and I'm just extending it up based off of where price is currently at, but at the time we were only here. And I will actually do everyone a favor that is watching this with me or going through the motions. I'll remove Monday's candle so you can just see Friday's action and how the trend line correlates to bouncing off of the lower wick of this particular Friday's bar. Here, this was ideal. Let's zoom out a bit. I want you to see the left of the chart, and right here we can see where Apple was holding a prior support. Prior support. I love to buy prior support. However, leading up into earnings, we don't touch a trade. This side of the chart where Apple had a massive down drop, we did take advantage of this trade, trading it to the short side. But I'm discussing what we're doing or what we did currently in order to capture this week's upside move and based off of the mindset of analyzing this chart. Hit support, earnings occurred, price action was right here, setting up for the next leg up. And I'll hit play on this chart, and then you can see here the massive ride up. Depending on your expiration date as well as strike price, this is where the 400% plus returns come into play. Because I know my data, I can do a strike and expiration price selection that's going to give me the ultimate maximum return off of my investment. Apple, straight uptrend. The next chart we'll get into, PG, Procter and Gamble Company. Very similar to all the other setups I ever showed on Finesse Fridays. Same concept in mind, but you'll notice one thing. Although the market was falling, these particular setups went up. And I'm also going to show you one that we're literally still trailing in, and we're just letting it do its thing, and that is Target. Before I go to Target, I want to just draw this trend line. Trend line is your friend. Always, when you're trading, it could be swing trading, it could be trend trading, it could be day trading. Make sure you trade in the direction of the trend. And here we go, PG. I'll do the same thing. I'll put it in bar replay mode. That way, we can see exactly what I was looking at. What was I seeing for this thing to make a massive move up? I saw a continuation of the dominant trend at this point in time. Already had earnings, so we're clear out the way. We have a high probability trade setup, not 50-50. and we are ready to rock out. So it's just a matter of the entry point. Our entry point triggered on Monday, and we were able to enjoy this beautiful move up, and it's still pushing into today as far as the price action is concerned. We usually trail stop to our second TP. Our first TP range has been achieved, and then we're just waiting for the second TP, see if the continuation will continue to push into next week's price action as we trail stop. Trail stop is a simple process of moving up the stop loss while we are in profits and letting the trade do its thing. Target. I went over this probably one of the first Finesse Fridays. This thing is still extending. Same concept, adjusting trail stops as price move higher. Get into Micron Technology. Ooh, I couldn't wait to short this stock. So I bought puts on the Monday, where this is Monday's bar. Price was around, you can see the range, 442.43, and then we have a low of 410. So within this range, I bought puts. The analysis for this stock was performed over the weekend. I did drop it into our Discord trading community so members can also take advantage of not only looking at the chart, but also seeing exactly what I saw at the time. And it channeled up until Wednesday. We had a solid drop. One thing I want to do, I'm going to put a trend line up so you can see the trend line break that occurred on Wednesday in the direction of the anticipated trade, which was a downtrend and solid. Now, the 410 puts that I entered from the range of this day, it was low was around under $1,000 a contract. This day, those same 410 contracts, and this is next week's expiration, so Friday the 13th, this moved to 48.50 at the time what I last saw as a high. Massive move. That's over 350% when you do the math. But all based off of technical analysis. In a red market, flexibility matters. We're not married to direction. It's all about execution. Using puts on MU allowed us to capitalize on the downside momentum responsibly. At the same time, with Bitcoin dropping to 60,000, only fueled more fear. With crypto being weak and falling, it only contributed to more of the market sentiment. However, sentiment doesn't dictate our decisions, structure does. We don't trade headlines, we trade levels, context, and confirmation.